Mike Tedeschi, Portfolio Manager over at Perspective Wealth Planning with this week's market breakdown video. We're going to take a look at the four major U.S. indexes, and we are going to spend a bunch of time taking a look at the U.S. dollar as well as commodities, as once again, the largest moves this week have happened in that space. We're also going to take a look at the Nasdaq Advanced Decline Line, talk a little bit about breadth as well. Let's jump right into it here. Now, first and foremost, we closed last week right here at this candle. Monday and Tuesday were really ugly for the S&P 500, but if you notice, we did not put in a lower low, and we get that big turnaround bounce in on Wednesday. Now, the market is nowhere out of the woods yet. We could certainly get trapped inside this range between essentially 4,100 and 4,400, and those are the areas that we're really watching. If we get back up over 4,400, we've got room to run back to that 46 before our next resistance zone, and if we fall below the lows from a couple of weeks back, that really does open up the downside for us. Our next level of support really comes in around that 3,900 level, and then all the way back down around that 3,700 level. So we're going to pay very close attention to what goes on right here. But yesterday's bounce was really strong. We saw almost a 3% move higher out of the S&P 500. Nasdaq saw almost 4%. And let's actually take a look in at the Nasdaq chart now. As you can see, we've got 13,000 laid out. We've talked about this many times as a super important key level. And on the upside, that 14,400. That is the zone that we're trapped in here. But you can see, just like the S&P 500, we did not take that low out from a week or so back. So the bounce happened right exactly where it needed to happen. And now we're just looking to see if we're going to get some follow through. The Russell actually stronger than the other two, where its pullback here this week did not come as close to making those lows as the other indexes did. And you can see the key on this is going to be that 2,100 level. And right now we're kind of trapped between that 1,900 and 2,100. And we're sitting right in the middle at about that 2,000 level, right? Russell's got to get back over 2,100 for us to get excited about this area of the market. And underneath that 1,900 would really open things up to the next leg lower. We come in and we take a look in at the Dow. We want the Dow back up over that 33,300 zone. You can see from the lines that we've got on the chart. But we put in that low right around that 32,000 level. And you can once again see in on Tuesday, that was a higher low potentially. But we need to get back up over this zone here before we can get too excited about it. So bottom line is we saw a bounce right where we had to see a bounce, or we were going to end up potentially breaking those lows from a week or so ago, which would have been really bad. The question now becomes is, do we get any follow through to the upside or not? And we have to continue to pay very close attention to what goes on here to get an answer to that. Now, the U.S. dollar, we've talked a lot about this, and you can see here's our box from last year. In fact, let me go ahead and extend that now so that we can clearly see it. This is the price action zone between 97 and basically 98. We had a clear move above it up towards that 99 level, and now we are back testing that potential breakout spot. You can see right where we ran into was that big price action level from 2020. If the dollar can get up over that 99.5 zone, it does have room to run back towards those 2020 highs. That's a lot to ask of it right now, because what we have at the moment, even though we're back testing this breakout, we also really have a rejection of this price zone. So we had a big push up and a rejection here. So what happens at this juncture between 98 and 99.5 is really important. Above, that does give us another potential move up on the U.S. dollar. And if it falls back below this zone, this could end up being that kind of false breakout. And the dollar has been on a really strong run since April of last year. So we're going to pay very close attention to what happens here. Now, let's jump in and let's take a look at metals first. Now, I want to take a look at copper to begin with. Copper, this price action zone that we have actually comes back on the monthly time frame, going all the way back to 2009, 2010. So above this grayed out box is all-time highs that were made in 2021. We took out the 2021 highs. We were not able to hold over them at the moment and fell right back down to that 450 zone. 450 to 480 is an area that we haven't spent much time in. We spent a couple of weeks last year a couple of times, and the market was not able to make that break above and fell back into this range here. This time we made the break above, and now we've pulled back. The question is can we hold above that 450 and not go back down into this zone? If we hold right here, then what we have is that breakout, potential back test, and then the opportunity for us to continue to head higher. Above 480, this market looks strong. Below 450, it does not look nearly as strong. Let's take a look next at gold. Gold came very close to making a new all-time high. It missed it by a couple of points. So the all-time high, 2089, and we got to 2079. So we missed it by just 10 points on that big push. We are holding above that 1970 zone, and this is the area we talked a lot about. So we pushed up towards those potential highs, came back down, but we did not break below this zone. If you're watching this market, it's easy to like this above those all-time highs, and if you fall back below that 1950 zone, the excitement from this move kind of goes away. Your next zone of support's back in that 1880 area. So gold bulls really want to see us hold right here and make that push back up, make a nice pattern, and finally get that breakout to new all-time highs. So that's what we're watching there very closely in on gold. Silver back up over 27, not able to hold over that zone. We've had this line drawn on the chart for quite some time. That was the high from last June. Rejection there, kind of the same way gold was rejected at those all-time highs. Now, silver's still done pretty well here over the last couple of months, but in the face of concern, gold usually outperforms silver. It's a better flight to safety than silver is. Silver's still more of an industrial and speculative metal, whereas gold's kind of that store of value. So when we get into geopolitical concerns, gold typically tends to do better than silver, and we can see that because silver is still off of those highs from last year by a considerable amount. We pierced 30, and we're trading at 26, whereas gold literally almost got to those highs. Over 27, that does open the door for silver to get back up towards that 29 zone. The key level for silver to hold is going to be this 25 zone. We don't want to see us fall back underneath 25. That's where we spent most of the last 6 months. That would not be a constructive for this chart for the bulls. Let's look at Palladium next. Palladium, once again, the leader. This has been a wild ride. You guys have watched me talk about this over the last couple of years. We made that all-time high at 3,000 and then gave back 50%, came all the way back down, essentially to the coronavirus lows, back down in here, just in December. So from December to now, Palladium has essentially doubled. The reason being is Russia is one of the largest suppliers of palladium, and so you can see Palladium actually had made a nice bounce, but was sitting at this resistance zone right here before all of the concern with Russia and Ukraine, and from that point forward it essentially went up in a straight line as global concerns in terms of supply of palladium really escalated. Platinum has not done as well. It got above that key 1140 zone and fell right back below it, right? You can see we've talked about this a lot. We had a nice wedge. We made a nice breakout. We made another wedge. We got that push, but now we've come all the way back down. We really do not want to see platinum kind of fall below this 1180 zone. Otherwise, it kind of falls back into the trap of probably coming back down to the middle of the range, which is about that 1020 zone. So we're going to pay very close attention here. This one has been kind of a mess over the last few years. It has not been nearly as strong. And you can see when we back the chart up, I want you guys to see the chart of platinum. Platinum is nowhere near its highs, right? Versus the other metals, which are a lot closer, some of which basically almost at those highs. So we're going to continue to watch this market. Because the other thing is, as palladium gets more and more expensive, platinum comes in to take some of the industrial use. So platinum and palladium a lot in catalytic converters. Palladium being the better metal does a better job, and that's why we've kind of seen palladium take off over the last decade, because we used to use platinum and now we switched that over to palladium. If palladium gets too expensive, you're going to see manufacturers switch back towards platinum because it does accomplish the same thing, not nearly as good, but if costs get exorbitant and too out of control with palladium, you do see more money spent in terms of platinum, so we're going to continue to watch that very closely. Next, we need to jump in and talk about our soft commodities. Specifically, let's start with some of the smaller ones, the ones that haven't made as much of a move. Here is soybeans. And look at this on a monthly basis. We're almost right up to those highs that we put in 2012. We got very, very close. Didn't quite make that break out. So we had a big push, pullback for most of last year, and then a follow through here on some concerns in the soft commodity arena based on what's going on in Russia and Ukraine. We're still looking for this to get back up over those highs. A failure here would be a decade-long essentially double top. Next, we take a look at corn. Corn is above that 720 zone, which was the highs from last year, but it's still off of the highs that we had back in 2012. So we're watching those mid-800s. Now, the one everybody's talking about the most and the one that's made the biggest move is wheat. Wheat has the biggest exposure essentially to Ukraine and Russia, who are both large producers of wheat. And you can see we did go and make a new all-time high, though marginally. This market has been absolutely wild here over the last couple of weeks. We've had multiple limit up days. We had one limit up day, a limit down day. This was limit up, this was limit down, this was limit up, this was limit up, this was limit up, this was limit up, this was limit up. This hit limit up, went to limit down, bounced back to the middle, then you had a limit down day, and now you're down again. So these have just been some huge moves inside the wheat space. This is not a market that you want to get involved in at the moment with the massive amount of volatility. When we look at this from a major charting standpoint, the all-time high monthly close, even though we spiked in 2008 all the way up to that 1350 level, the all-time high monthly close is still 1087. If we can hold up over that zone, it is trading at basically those all-time high closes on a monthly time frame. And the most interesting thing about this chart is this is a decade-long, essentially, cup pattern that has led to that explosive move to the upside. So we're going to watch this market very closely and see if we get some sort of consolidation inside of this zone that gives us some sort of actionable setup that we can jump in on. But with the limit up and limit down days all the time right now, the volatility is just too high in this market to get excited about doing anything in it. The last thing that I want to talk about here today is taking a look in at some breadth readings. We're actually going to take a look at the Advanced Decline Line in and of the Nasdaq. What's incredible here is over the last week, we actually took out the coronavirus lows back in 2020, and we also took out the lows from the taper tantrum back in 2019 in terms of the advanced decline line, meaning more stocks on the Nasdaq were in a decline versus an advance than we saw back in 2020 and in 2019. Now, both of these were extremes where we saw quick turnaround bounces. So what we are really watching for right here, and we did make a pretty substantial bounce with yesterday's move. The low was here, and we are all the way back up to here, just so you guys can see. We are looking for that extreme potential bounce in here. If we continue to see more and more slide and this continue to open up to the downside, that would be a very bad sign. This has been the area for the last couple of years where we've saw those quick, strong sell-offs. We have made those turnarounds from inside this zone. The bottom line here, as we have talked about, when we take a look in at the Nasdaq in and of itself, and all of the major indexes, these are the zones that we have to see hold. If we continue to see the market slide from here, we are going to have breadth readings continue to break lower, below a level that we haven't seen in many years, and we're going to see a lot of these important key support levels break. We had the bounce yesterday. The question now, is it going to hold? Are we going to see some follow through? And that's what we're watching very, very closely here to figure out whether or not we need more protection or whether we are headed back up towards those highs. Hope you guys have yourself a fantastic week. As always, if you guys have any questions, feel free to reach out to me. You can reach me at mtedeschi at perspectiveofplaying.com or give me a call at 814-580-9881. I'd love to talk anything about the markets with you guys. Stay safe out there. Have yourself a fantastic one. Take care.